Hey, Mac, how are you?
I'm doing great, Chris. And how about yourself?
Very good. Very good. Does it sound like I'm yelling?
Nope. It sounds like you're excited and ready for an awesome show tonight. Just tell me
Because
what's going on. You're the
I,
host tonight.
well, I no, I don't know about that hosting thing. I don't know if I can ever meet your standard, or you set the bar, my friend. But thanks for letting me try it out tonight. Anyway, I need to get down to see you. While we're waiting for people to join, let's just talk a bunch of nonsense because we got a very special guest tonight. And I'll let you introduce her though. I got to get down to see you and get these microphones and all this other stuff done. Get you put your little propeller hat on and do this techie stuff for me. So
Yeah, we gotta get your in-home studio set up for you. Get your nice golden mic and get you some headphones and get you sound like that DJ that you are. So,
do I need to come down with my drill and hammers and fix stuff for you? Is that what we're going to trade off?
all my toilets are actually working now. But
Your
thank you.
toilets are working? They're flushing okay?
I do appreciate the white glove treatment and the suit and tie that when you swapped out my flapper valve on my toilet. Thank you for doing that.
All right, we got about 10 viewers here, so we're going to see this ramp up right away. I'm hoping everybody's reading that post because our guest tonight is going to, it's timely as we come to the end of 2020. But in the meantime, we want to talk about one quick subject. Go ahead, throw it out there. So anyway, just quickly welcome everybody to.
Hey, Lewis, thanks for saying hi. Lewis is the first one on. He's sharp as the whip. Appreciate it.
Yeah, tell us where you're at, you guys, because we always get our Australian connection.
Yeah, we got lots. Yeah, come in, say hi, get comfortable. We got a phenomenally packed show tonight. So Diana's going to give us the lowdown on rental income and expenses as it relates to your T776 form, which is what you submit every year to the CRA to do your taxes on your rental properties. She has been very concise and diligent in what she's going to present tonight. There's a wealth of information, and because of that, we're going to have to keep the conversation in a certain scope so we can get you guys the best benefits possible. So there's certain subjects and things we won't talk about, and we're going to really keep the conversation focused. So some questions may do with your own personal tax situation, which doesn't really jive on a live show. So those are conversations best on another platform. But before we go down that route, Chris and I wanted to make a quick announcement talking about our community, your guys' community, not just ours, this community that we've got, this collaboration, this engagement, this culture, which we're so just extremely proud to be part of. Like we really are. We had to go through, and we had a landlord on here getting harassed by a former tenant that was just really a horrible person, to put it lightly. You can't even put it lightly, just no other way to put it. And there was someone in this group that was leaking information and to this her ex-tenant, and then she was getting verbally assaulted on text and other mediums. It wasn't appropriate at all. So a little bit of detective work, and I learned a thing or two from Chris and his experience as a police officer here. But we got that person removed, and just to set the standard here, we are very protective of this. Your guys' willingness to share within our environment. That is so invaluable. That trust that you guys have given us is second to none. And that's why that has to be protected. Hands down, that's our top priority. So any of that kind of behavior that happens and someone's harassing you or something's going on, let us know. This is a private community. The conversation stays within these walls. And if someone's getting harassed, we will not think twice about having you removed. It's simple as that, because we're very fortunate to have this cohesive community, and we want to keep it that way.
Absolutely. And we have two excellent ladies that have joined us as moderators, and it was great to watch our 4-level team come together here. And the ladies were in it, and they were checking out, and they put their little investigator hats on. And between the 4 of us and the person that was having the difficulty, we managed to narrow it down. And sure enough, through a process of elimination, we were able to figure out what was going on. I'll just go back over, not to put any fear into anybody, but at the end of the day, the information that's posted on here is information that you are putting in. You're the input people, and you're responsible for the validity and the truth behind it. And if at the end of the day, you're the one that has to be accountable, we've given you a platform to put this on. So make sure when you post something, it's backed by fact, it's backed by pictures, and if you're questioned on it, you were to have to take the stand in a court, in a legal court, that you could swear the information to be true. And as long as it's the truth, there is no issue.
Yeah, 100%.
You could tell somebody they look like a goat, and if in fact they take a picture of them, you hold it up beside a goat, well, the goat's a goat's a goat. You know what I mean? It's the truth. So it'll make you laugh, eh, Mac?
Yeah, that's a great analogy. I've never thought of that way, but
I have my ways.
and the last part before we get to our esteemed guest is we saw a post today is some people are having trouble getting the page. We do our best with the knowledge that we have to ensure we're only letting landlords in. That also means we're probably blocking landlords that deserve to be here. If you know someone that's trying to get in and they haven't got through, number one, make sure they answer all the questions. If they have a very private Facebook profile that's locked down, and whereas we're checking to make sure we are letting a landlord in, reach out to us, talk to us. If that's the case, we'll get them to reapply, and we'll all be on the same page. So
yes, absolutely. That's really important. Is if you're referring somebody, we give it a couple days, and if they don't answer the questions, we just decline it. That says two things. Yeah, they'll have to reply, but it also says two things. They're not as engaged as you, and they kind of don't care. I'm glad you referred them, absolutely. But if they don't care enough to go and look to the invitation you've sent, then we just decline it. So, and reach out to Mac or I personally and tell us what's going on, or have them reach to us. We'll do some background. But these tight Facebook pages that are so tight that you can't see anything but a picture, 9 times out of 10. They're going to get deleted. Or the invitation is going to be declined just because we can't see anything and verify anything. And I actually had one where someone had their Facebook account was 33 minutes old, and they came to our group. So that's just screams. If
there's not a lot of information, long story short, if not a lot of information, it's a new Facebook profile. We're very skeptical because we've gotten tenants in the past breaking into the group, and they still do it today. It's an ongoing problem. We have to keep them out to protect this culture that we all have together and helping each other out. It's a privileged conversation we're proud to be a part of. Yeah, and last thing is we certainly have some big ideas coming up where we're going to be able to protect anymore. We may move to a different medium or platform that gets it very specific, and we're looking at everything every day to make this the best thing for you. So, yeah. Mac, over to you and our special guest. Let's do it. Diana has been completely politely waiting in the wickets for us. Let's pop her on the show, get her going. She's got just a ton of information we're going to hammer out tonight, and yeah, let's get her on right now. If this person doesn't convince you she should be your bookkeeper tonight, you guys are crazy. Hey Diana, how's it going?
Hi, how are you guys?
Excited to have you on the show again.
Thank you for having me. I'm excited.
Yeah, so before we get into the wealth of your information, for the people that don't know you, who is Diana and what do you do?
Oh, okay. Well, I'm Diana Irving. I've been a professional bookkeeper for over 20 years. I mainly do bookkeeping on real estate rentals, but I also have other clients from home builders to engineers. I also provide tax preparation that I work with some clients doing that also. So yeah, I use mainly in the cloud. That's what probably 95% of my clients like, is in the cloud. They like the storage, they like the easy access, so that they're not waiting to see anything. It is real time on, managing their books and seeing what's going on a daily basis, so they can make good business decisions on their cash flow and their profit and loss statements. Mm-hmm.
Love it. Absolutely love it. Perfect. All right, so tonight's an interesting topic. It's something that probably 99% of us as landlords have to do. The other 1% are probably incorporated and they do a little bit differently. But we got to fill out a T776 rental income. Oh no, I should have had that written down, and I don't. What's that form called?
It's your rental expense form is what it is, right? I could just, if I had it, okay. I don't know if you can see it, a statement of rental expenses. So it looks like that.
Expenses. That was the keyword I'm looking for.
Yeah, so that's part of your T1 tax return.
Exactly. So you're going to cover some really good scope around the key information that goes into this form and provide a lot of clarity, because, all things being taxes, there's a lot of avenues and rat holes that go down, and we want to provide as much information in a very concise format. So Diana, where should we start with this conversation?
Okay, well, it's very important because tax season is coming, right? I always tell my clients, 'tis the season. They don't find it funny, but I do, because it is. The season's coming, right?
Yeah.
So at the end, if you're a proprietor, like most, by the end of December, that's it. You can't really do a lot to change your tax returns, except for perhaps RSPs or investments, things like that. So it's absolutely crucial that you know what your expenses are and you're not missing them, or you've classified them in the right area, right? And that's where I'll talk a little bit about current and capital expenditures. Really, really important. You don't want to be expensing something that's a capital expenditure that you're only allowed to depreciate. Okay, so those things are really, really key. I've found that some people just don't know, right? And so they file away, or they send all their documents to their accountant or tax preparer. And if they aren't asking the question, then you've missed those expenses or put them in the wrong area, right? But you can always adjust your taxes, right? There isn't a problem of ever adjusting your taxes as long as you have the proof to show that.
Yeah, and I know this is sidebar of the conversation, but this is why having your books done before the end of the tax year, you may have the decision or the insight to maybe do an additional expense or something to maximize your returns.
You can make those decisions, right? So if you're up to date on your books, to the end of November, as close as you can, and you can also see your cash flow and say, well, do I really need to make that expense, in December, or is it more advantageous for me to maybe do it in January, February? I have the money, but, I don't want to pay as much tax, right? So those are things that are important to make sure that you're keeping. On my list to go over is make sure you keep really good records of everything you have. It's crucial to do that so that you can make the best decision and you can lessen your tax payable.
Okay, phenomenal.
So I think what we'll start is, the first thing is you have to decide whether you have rental income or business income. And some people don't understand that. Most of you, I'm sure, have rental income, but if you're providing more services than just utilities, like if you're providing security or cleaning or meals like that, then it's not a rental property, it's actually running a business. So you have to sort of look at what you are providing to ensure that you're not running a business and they are actual rental properties. Okay, there's different ways of filing on your tax return for that. Okay, when it comes to income and claiming your income, showing your income, if Revenue Canada ever wanted to see it, then if your tenants are paying with you by check, e-transfer, you have a paper trail. But if they're paying by cash, then you should give them a receipt. Okay, that's your protection, and so that that you've collected the rent from them and you're claiming that on your tax return. Okay, that goes for expenses also. If you're doing an expense and paying cash, if you do not have that receipt or any type of backup to show Revenue Canada and they audit you, they will wipe out those expenses. Yeah, so it's on you to provide it, right? It's up to you, if you have that expense, to provide proof that that's what it's for if you pay by cash.
Yeah, and I'll probably just highlight that. I am not any different here. I'm probably one of most of us landlords that will do some cash jobs to get things done a little more cheaper. Try putting them through on your taxes. You certainly can, but ultimately it comes down to, if you get audited, you got to be able to show proof as who the person who submitted your own, or provide the information on your own tax return to find what they're looking for. And chances are, if you do get audited, that stuff will get all wiped out, like you said, Diana.
Yeah, it's still, even though a lot of the technology, everything's going into the cloud, Revenue Canada still wants that receipt. They want the paper trail, right? They have to have that to go against what you're trying to claim. Okay, cool. So when you get down to expenses, now there's two types of expenses. Okay, there are your current expenses and your capital expenses. Okay, current are, like regular maintenance that you're doing. They have a short-term life. You're trying to do expenses or repairs to get it back to the quality you kind of had it, right? Your day-to-day sort of repairs. Capital expenses are very, very different. And Revenue Canada gives a sort of a chart to give you guidance on what capital expenditures are, okay? And so I'm going to go through all the points, right, that they give and the question they ask, and sort of give you an example on each one. Now, always, if you're unsure, you can call Revenue Canada. They can give you a ruling. Okay, they can give you that decision, because some areas are a little gray on this, depending on the timing that you do it. If you're in the middle of a sale or thinking of selling in renovations and things like that. So there are questions you need to ask yourself on those. And if you're absolutely unsure, I would advise you to call Revenue Canada and explain your situation. They can give you a ruling which you can go by. So that if you ever did get audited, you have your ruling to state why you claimed it as an expense. It's usually the claim of the expense over the capital expenditure.
Okay, this is kind of new to me. So there's a ruling. So is a ruling like done right in that moment in that conversation? They give you like a unique case number or something that you take. So you have a conversation about a gray area. It could go one or the other, whether it's expenses or capital expenditures. And they will help you make a decision on what it should be applied at. And since if it's really unique, they will give you a unique identifier or a code that you can go back into your actual tax return.
They'll give you a ruling. So you have to call Revenue Canada, usually the business line, and then they will direct you to the ruling area, right? It's not somebody that can just answer the phone at Revenue Canada and give you that. Right? You usually have to be transferred to there is a ruling department that will look at it. They may not give you an answer right away. They can call you back on it if it's something really specific and big, right? Because I've had questions on people that have tried to put renovations through, like $10,000, said, nope, it's a renovation. And really it's a capital, right? So they should have been depreciating it, but it looked great on their taxes. They didn't have to owe anything, right? Because they they expensed it, right? So these are key things that they do look for, right? So if you have repairs and maintenance at $15,000, you're going to get questioned, right? Unless you have all the backup and the proof, right? Like the place was pretty dilapidated and you had to do these repairs, right? But again, that's an area where were you getting it ready to rent? Right? Like, were you preparing that house in order to get it to rent? If you were, then that's more a capital expenditure, right? So these are key areas that you need to think about and talk with them about, because it's everyone's different, right? In your situation, so there isn't the norm for everybody, right? Everybody's situation in their house is different. So if you want to start with like the first one, you would ask, of course, does the expense does it have a lasting benefit to the home? Right? So a good example is if you decided to do vinyl siding on your house, okay? So vinyl siding or smartboard has a long-term value on your home, right? As opposed to if you had a wood home and you painted it, right? Well, the sun, the weather, when it's going to wear and tear, and it's not going to last. So the vinyl would be called a capital expenditure. And that you would add to the value of the building. Okay. And then you could depreciate that down the road.
Okay. I want to jump in and highlight two important things you said. So we'll take one step back, going back to that the rulings and talking about that. There's actually expenses that fall into a gray area that can actually go one way or the other that is worth getting consulted. So having a good bookkeeper who can identify this for you, and more importantly, engage and start the right process to get the answer you need specific to your tax situation, and even perhaps get a ruling number to add into your tax return. So I didn't even know that. That's good to know.
But it's also important to tell your tax preparer or your accountant. Lots of them don't know. You're giving them a spreadsheet of what you have, right? You're saying repairs and maintenance were this, and this was this, and this was that. And they're not looking at all your receipts. If you're not providing your receipts and just saying go with this, then they go with it, right? You also really need to be talking with your tax preparer and your accountant, whoever's working with you, so that they understand that, oh, this really wasn't a repair. This was a roof, or this was something major, right? And those cannot be expensed.
Okay.
Can I jump in?
Can.
As long as you're on side, keep it on.
Well, I am. And you know what? I have to be your visual aid in this, because when I came to you, you go, Chris, you can't do those things. It's true though, isn't it?
Yeah. Sorry, I don't want to use your name.
But I have to say, I validate everything you say by how I was doing things. But my accountant, when I handed him my spreadsheet, goes, okay, filled it out, done. When I came to you, you go, okay, we need to talk.
Yeah, because he just saw a summary of everything. He didn't see the breakdown, which I did, that said, okay, whoa. This huge amount of maintenance and repairs was one thing, right?
Right. So now this is where the value comes in, and the long-term stress relief, because when Revenue Canada now comes and says, okay, we want to see all this, and then they start going backwards, and then you find out you owe money. Well, this person here, Diana, or a good bookkeeper, is going to keep things right for you. And I'll tell you, the stress relief I felt after talking to you about how some of the things I was doing, like I was keeping good records, but I wasn't keeping them right. And when I provided them to my accountant, they just said, okay, but it's not verified, where Diana verified it for me. So
yeah, because your accountant wouldn't know. Like it is important that you let your accountant know too, right? Like they're taking what you say, this is it, this is what I did, right? So I always tell people, go meet with your accountant, tell them what you've been doing, tell them what's going on in your rental properties, right? You're not just collecting rent and having simple expenses. Yeah. We actually replace this big item. You know, it's a capital expense. Should I depreciate it? Should I wait? Shouldn't I? Those are things that you really need to be discussing with your tax preparer and or your accountant, right? Because it makes a big difference.
Right. And there's one point too I want to bring back here that you just covered before I riffed in the first point was I think the golden rule to help people figure it out. I really want to highlight this. The difference between a expense and a capital expenditure is, does it provide lasting value to your property? Does it provide an increase in price? And so, you know, what was that good example we were talking earlier today when we were getting ready for the show, Dan? You're talking about the stairs, and there's two different.
Yeah. So the next question, I guess, is, does the expense maintain or improve the building, right? So let's say you have wooden stairs going down, and you decide you want to change them to cement. Okay. So some really nice fancy aggregates or whatever down. The cost of that would be a capital expenditure, not a current expense, because that's improving the building. That's improving that better than it was before you purchased it. Okay. If you decide that you just, just gonna, you know, fix the stairs and maybe paint them a bit, you know, spruce them up a bit, you don't want to spend that big money, then that you would expense within the year it's incurred. Okay. The capital expense would be added to the building, because it's part of the building. You're improving that staircase into an aggregate staircase, just as if you, a little bit different is if you built a brand new fence. Fences can cost $2,000, $3,000, okay? Those are not an expense. Those are a capital expenditure, okay? And they, again, can be depreciated. I'll talk about depreciation a little bit after. But if you had to fix some boards, right, in the fence, that would be an expense in the year you incur it. You cannot take your expenses from 2018 because you forgot them and try to put them into 19, okay? You would have to go back and do an adjustment on your tax return, which you can do, right? If you have the receipts, by all means do it, especially if you owed money, right? Yeah. It will lessen that for you. So there is never a problem to do adjustments on your tax return.
Yeah, totally. Probably the only question they would have to look at is if it's a smaller amount, and you got to reopen up your books, resend them in, you got an additional accounting fee to take in consideration as well, or bookkeeping, depending on how you do it. Yeah. Are you still getting a net benefit out of spending a little bit of money to claim a little bit of money? Also, if it's a few big items, you're like, oh, whoops, by all means, that makes sense, less than your tax.
Yeah. Bigger, yeah, of course. If it's small, like $100, that's not really going to make a lot of difference on your tax return. You know, especially if you have quite a few properties, it's not going to make much of a difference at all. Yeah. But if it's a bigger item, a couple big items, then yeah, you may want to, right? Because it's down the road, right? If it's a capital expenditure you've missed, you may only depreciate a little bit, but you keep getting depreciated every year, or choose not to depreciate it. Okay, there's a big difference in that.
So let's talk just because people will be asking us, because I'm actually wondering now. So let's say carpet or flooring throughout a house versus one room that gets wrecked. Are those capital expenditures? Or say you have a wreck on a rental where you have to repaint the place versus painting a room. What would be the differences there?
I'll add another example before I'll let Diana get into. We had the same discussion too. It's like, if I replace a single toilet, or am I redoing the whole bathroom?
Okay, so that again goes to you know, is it a big expense or small or an improvement to what it was before? Damages are a little bit different, right? If a tenant has completely damaged it and you have to do it, there's where, again, that could be a decision that Revenue Canada would make, depending on the cost, okay? So if you're replacing a toilet versus renovating a bathroom, well, renovating a bathroom can be quite costly, right? Same as replacing a sink to renovating a kitchen. So if you're replacing a toilet, you're not, it's useful, right? But it's not a big expense, right? Yeah. So you wouldn't capitalize it, you would expense it. But a renovation to a bathroom, as you both know, can be, you know, that's extending the life of that part of the house, right?
And if you look at another way, like how does it affect a resale? A new bathroom, new kitchens will raise the value of the property, capital expenditure. A new toilet is indifferent. It doesn't, whether the toilet's older or newer, assuming it wasn't like a really bad toilet, the price of the property won't change. Therefore, it's just an expense in that year.
Yeah. Painting too, like painting, if you're painting a room, that's an expense. Depending on the cost and how big the inside, it's usually an expense, right? Yeah. It's not necessarily adding massive value to the building as a whole. And that's the questions you have to understand is it providing a lasting benefit? Is it improving the home prior to when you have it? Like you adding extra things on, okay? If you add a deck that wasn't there before, right? If you add a big fancy fence and things like that, okay? Bigger items. If you add all brand new windows, do a roof, right? Those are capital expenditures. As we all know, roofs are extremely expensive. Windows can be really expensive. Bigger ticket items that you're doing are usually classified as a capital expenditure. But again, this list is a guideline that Revenue Canada gives. If you are absolutely unsure, you do need to talk to them, okay? Because the last thing you want to do is expense it, and then they look at your tax return and go, it's not going to work, right? They're going to audit you, okay? So, and it goes down to like the value of the expense, right? You have to compare the value of the expense to the value of the property too, right? Yeah, so again, it is a guideline. It's not set in stone. So you have to really look at some of these costs as to the value or not, right? How big? I see someone saying cabinets and countertops equal capital. Yes, because cabinets and countertops can be very expensive, right? So yes, you're adding value to that kitchen, to that home.
Okay.
Right.
I know you got a wealth of information. Should we keep moving on to the next subject here?
So again, I'm just gonna. Okay. So here's a real tricky one. Okay. So let's say that you're doing a renovation. Okay. Or you decide you're going to start to do some major renovation repairs, and this will fall in with capital or not too. And then all of a sudden, in the middle of your renos, you decide you're going to sell your house. So this is a real gray area. Usually big renovations become capital assets. But if you're doing it in the middle and then decide you're negotiating for the sale of the home, they can also be classified as an expense. Okay, so again, this goes on point in time, value of what you're doing and what you're doing. Okay, so what I'm basically trying to say is don't assume that it's one or the other. Okay, if you're absolutely unsure, then do get the proper advice either from your accountant or from Revenue Canada, right?
If in doubt, ask.
Yeah, very much so. If in doubt, if you're doing like renovation costs for a home that you're going to have someone who's has a disability, right? You're putting ramps in and things like those aren't capital at all. Those are full expenses. So if any of you have are doing rental properties that are going to be converted for someone that is disabled, right? That is not considered a capital expense with Revenue Canada. Those are you can expense those in the year that you incur them. That's a special circumstance too for that. Yeah. So capital and current, there's a lot of gray area in them, but look at the value of what you're bringing to the home. Okay. If you're buying furniture, let's say you're renting out a what do you call it? Pre-suited place that you're providing furniture and things like that. Those are assets. If you replace a washer dryer, right? That's an asset. That's a capital expenditure. They aren't added to the building. They're a separate asset. So when you purchase your rental property, you will have your building. That's your capital asset. but also the legal costs and other costs that you incur to buy that home are added back to that value of the building. So if you bought a house for $300,000 and you had to pay $1,000 in legal fees, your house is now worth $301,000. Okay, you add your legal fees back in to the value. Okay, if you had to buy like appliances and furniture and things like those are assets, capital assets. You can't expense them, but those can be depreciated a different percentage than your build if you decided to do your building.
Can I ask you a question here? Hopefully,
of course.
Keep it on point here. So going back to a point in time purchase, if there's fees associated to that purchase that they get rolled back into the value of that purchase, not also market value, but value to the CRA when they do their book.
When you sell it. So if you bought that's your set amount. So if you bought it for $300 and you incurred legal costs, they can all be added back in at that time. So when you're setting up, you're doing your T77 for the first year, let's say you bought a house, right? Then there is an area on it where you would state the value of your building. And you would include the legal in that total amount. You are allowed to add that back in.
Okay.
The land, on the other hand, is not depreciable.
Yeah.
So most places I've seen that you buy, they'll give you a value for the land and the value for the building. You cannot depreciate the land. Land is not depreciable at all, whether you're corporate or proprietor.
So I think I may have already answered my question. What commonly will happen on negotiating for a property is, there's probably some repairs to be done. And they'll negotiate whether the seller or the buyer takes responsibility or if there's a cash settlement to cover that difference. If the, let's say, an example would be they replace an electrical panel. So I know that'd be a capital expenditure because that's a big piece of hardware in the building. Can that also be like the legal fees be folded into that purchase price since it's part of that same transaction? Or can you, what are some examples of expenses that could get rolled into that price on your first year of your T776?
So for the building, you mean?
Yeah.
Okay, so building would be renovation, big renovations. Okay, like simple wiring. If you're changing wiring in a room, like you're adding a fan or something like that, that's just an expense. But if you're rewiring a whole house, the value of that house is going to increase because it's if you have to do up to code, right? That is a capital expenditure. So that goes back to the value of the building. Okay.
Oh, I see.
So building is the building. Assets, furniture, even some small office equipment can be, appliances. Those are assets, but they aren't part of the building asset. It's completely separate.
Okay, yeah. I think I got you. Basically, what you're saying is in the first year of owning a property, and that would be on your very first T776 form for that building or a house you've bought, any of the capital expenditures get added into the value of the property.
Yeah, and any after that too. If you do more, it does. It's just when you do your tax return, it's good to show the value of the building. And then if it changes during the year, your tax preparer accountant will add that increase to the value of the building. So, right? So it's like if you go ahead.
Is it only the legal fees that are kind of like a soft cost that can get folded into that price? Is there any other costs like that can
commissions they sometimes put in, but it's usually legal fees that they incur. It's usually legal fees that are incurred.
Can you put inspection or appraisal fees in there as well, maybe?
Yeah, they can go into.
Okay, cool.
Yeah, they can go into. So that's and those aren't that expensive, right? But it's just putting that all in. So like I said, if your house was 300,000, now it's 300,000, 1,500 or 100, whatever it is that those costs incurred. That would be the value that you would put as your actual cost of your building. But just remember to separate out your land if you're doing your own taxes, right, on there. So just important, right? And then if you're going to decide that you want to depreciate on your taxes, that's a whole different area. And that you would look at after you have all your expenses in. So you would have your income, right, from your property. So if you're looking at a T77, in which we probably should have put one up on the screen so that people could sort of, if they don't really look at it, I know lots of people that file their taxes and then they don't really look at their tax returns. So, there is an area where you put your name and everything in, And then they ask you, do you own, if you have the rental seat, is it split? So what if you're living up top and you have someone renting down below? Okay, so then let's say 50% of all the expenses, right, you can expense. You can't expense all of them because you are upstairs. But when you're giving those numbers to your accountant or your tax preparer, you would give the entire amount and they will break out the 50%. Okay, because I have seen people that they only give their accountant 50%, right, because that's what they're entitled. So when the accountant actually does the calculation, they're only getting 25%, right? So make sure if your utilities, if your property taxes were $3,000 for the year, that's the full amount you give, because it will be broken out on the form to whatever percentage, 50, 40, 60, that is going to be allowed for it. Thank you. Look at you. There's the form.
Yeah, there's
okay. That's only if you're living in it. So if you're living upstairs or downstairs and it's, a 50% or 40%. Otherwise, it's 100%, and you will start to go through all those expenses. So your advertising, if you're on RentFaster, any of those that you use to do that, the insurance, right, that you use to insure your property, that's important. You want to make sure that's on there, right? Property taxes, you want to have that on there. Your property interest or your mortgage interest, you can write off. You can't do the mortgage principal like the US. The US, those lucky people get to write off part of their mortgage principal. We don't. But the mortgage interest you can. Yeah. So, which is good. Bank charges, lots of people keep bank accounts for their separate units or, all in one unit. So any bank or interest fees that you incur in that bank account, you can write those off too. Were you going to say something, Chris? Oh, okay, no. Okay. Office expenses, if you do have some, a few office expenses doing to paperwork that you're doing to collect your rents and things like that, you can write those off too. So legal and accounting, you can write off your accounting bill for whoever's preparing your taxes, things like that you can write off. That's pretty standard, right, to write that off. Management fee, if you're paying someone, if you have quite a few properties and you're paying a company to look after your properties, you can write that off too.
Oh, okay.
Okay. So repairs and maintenance, that's another one, right? So repairs and maintenance, again, make sure you're looking at that chart. Utilities, things like that, of course you can. Repairs and maintenance, you have to go change light bulbs or things. That, of course, that's all repairs and maintenance. We're talking bigger ticket items that you have to be careful on, right? For those types of things, right? Travel. Now, travel, I'm not sure, do you understand travel, Chris or Mackenzie? Have you ever?
No.
For that, okay.
I like to travel, but COVID's
no, I mean, I meant for your rental property. Okay. Okay, so travel for rental property. If you have one rental property and it's relatively close to where you live, okay, you can expense some travel for that to collect the rents if you're doing your own repairs. Okay, yep. So, but you have to kind of follow the guidelines of the motor expenses through Revenue Canada's guidelines, okay? So one property you can, but it's very minimal, right? If you have more than one property, and it's not right beside yours where you live, and you have to travel for it, let's say you have properties in another city, okay, you can expense the travel expenses except lodging and meals, okay, that's considered personal, you can't do that. But if you had to go across town, let's say you live in the north and have to come south, right, you can track your kilometers and that to collect rents, to services, if you have to oversee some maintenance, right? Yeah. If they're installing something and you have to be there, then you can write off those type of travel expenses. You must keep track though, like your kilometers you have to track. If it's a lot, and you're transporting tools and that in your vehicle, you can write some of that off, okay? But you have to be able to track it. Really important.
Yep. Yeah, absolutely.
Okay. A lot of people don't write them off because they can't be bothered. But if you have a lot of properties and you're managing them, it might be advantageous to take a little bit extra, deduction for that, right? For that area. So do you have any questions on the expense part?
We got a couple that popped up here. I can probably, well, you tell me if we want to keep it obviously within the scope and not go down to individual taxes.
Okay, so there's other expenses, landscaping.
So Aurora asked here, she said, What if it's a coach home and there's no land? The unit is on top of another unit. Would it be considered zero for the land?
What's a coach home? I don't know what a.
I'm not sure. Maybe like
no.
a home?
A which?
Like a mobile home? I'm guessing. I'm actually not sure.
Don't know.
Well, you know what?
Maybe discuss that after.
Yeah.
Yeah.
Let's run with that and say, what about a mobile park where you don't own the land? And you're renting out the trailer.
If you own the trailer?
You own the trailer, but not the
value of the trailer. Yeah.
Yeah.
The value of a trailer. Yes. Yeah. Yeah. So also you can write off condo fees. So if you have condo fees, right? Landscaping fees, right? So to do some landscaping, that you can write those off too. Those aren't landscaping fees unless it's something really large, right? Those aren't considered capital, they're an expense, right? So you can write them off.
And what about courses?
Educational material for landlording. So
no, the real estate rental properties T776 is strictly income versus expenses you incur to earn that income. Okay, to learn that type of thing is not part of the T776. It would not be allowed.
Yeah, I'm gonna go out and correct me if I'm doing something I'm not supposed to be doing, Diana. But yeah, all the expenses we're talking about for a rental property, when you want to write off stuff, have to be directly related to running that property. Yeah. If you are, again, in the business of investing in real estate and you're improving your education stuff, those could be written off somewhere else in your tax return. But this conversation focuses around just that form and that property. So that's kind of the box. Usually we want to think out of the box. In this case, if we want to be in the box and thinking about the walls.
Yeah.
So,
yeah. Oh, and I know those courses can be very expensive, but they don't relate to that specific property, right? Yeah. So basically, we're looking at the income versus expenses incurred to earn that income. That would be outside of earning that income, right? So you have to stick to that specific unit and what you're incurring to make a profit.
Totally. Should we move on? Because I know when we reviewed it, you had a lot of material, and we got about 15 minutes left here, Diana. So
okay, no, we'll be quick. Okay, so when we're talking about, I guess best one would be, well, what you can't deduct, of course, is your mortgage. Any penalties and interest on like your NOA, your notice of assessments for your taxes. If you made a mistake or that, you can't deduct that on your rental property form. Okay, you can't deduct any of that. It's not allowed. And the value of your own labor. I get that question a lot. Can I charge? But if you're a proprietor, you're charging yourself. So no, you can't expense your own labor that you do, right? So good example is you two when you're helping each other out, right? You can't bill one another, right? Or if you're, sorry, I should say if you're fixing your own. So Mackenzie, if you're fixing something in a bathroom or if you're fixing something, you can't charge your own property for that. Okay, it's just not allowed, right? Because it's kind of money in, money out, right? Revenue Canada doesn't allow it.
Yeah, okay, fair enough then. I mean, we're talking like personal sole proprietorship. You own the house.
Yeah, we're not talking corporation.
Yeah.
No. It can be similar in some aspects, right? Because you would still track, if you have a corporation, you're still tracking everything, right? The same. You can still do individual profit losses and cash flows within your corporation. So you can see how each individual unit is performing, which of course you want, right? To make your decisions on, right? So if you want to go back to CCA, right? Capital cost. So capital cost on your building or capital cost on your assets. That is a decision that you can make in your tax return, and you would discuss that with your accountant. So let's say after income expenses, you had a profit of $5,000, okay? And you don't want to pay any tax. You're like, I'm not paying any tax. You have the option to decide if you want to depreciate your assets and depreciate your building, okay? And it goes on the rate. So the buildings are classified a little bit different depending on when you bought them, okay, to the different class that they'll sit in. For appliances and furniture, that's usually a class 8 and it's depreciated at 20% every year. Okay, so you cannot, and so that would be an extra expense. So that would lessen your profit, right? But you cannot depreciate past that. You can't create a loss with your depreciation. Okay, so you can't depreciate 8,000 so that you have a loss of 3. Okay, you can't. And you also have to think about if you start depreciating your building, when you go to sell, and let's say it's a fantastic market, and if your building is, you know, over the years you've depreciated it way down, you're going to have a much bigger gain, right? And pay capital gains on your building. So there are lots of different things to think about and talk about with, you know, either a tax preparer or your accountant to make these decisions.
That never really made sense until just now that you mentioned that. So
Yeah.
I'm going to highlight that. So you can write down, depreciate the asset, the physical item down in value, but then if you go to sell at a later date and it sells for way more to what you've brought the value down to over time, that big spread is now all taxable, and therefore you get hit with a larger tax.
Oh yeah, that's a gain. It's your profit.
Cool.
So if you bought it for 3, depreciate it down over the years, let's say to 250, you sell it for 4.
Yeah.
Right? You have a much bigger gain. But you also need to look at your tax planning, and in the picture, you know, at that point in time, you didn't have the money to pay your taxes, or you wanted, you know, so it's a much bigger picture, right? Than just deciding on that unit. And if you have a lot more units, or excuse me, homes, you know, 5 or 10 homes, then you have a lot of things to decide on per house, right? So being very aware and making sure you're keeping accurate expenses, keeping accurate ideas, you really have to do that, right?
Definitely. Yeah. I'm going to throw this one at you because I know this is coming up in your list of things to discuss. So if you got a question on it, maybe we'll kind of hop on that one. Melinda says, how many doors or properties are required to be able to write off some of your utility costs? I asked her to clarify this. So she's talking about writing off the utilities of her personal property if she's probably running an office out of that property. So maybe talking about writing off let's say it's your personal property and you're using some of that property for a business. Maybe the basement suite gets rented out, or maybe one room in the house is used for an office to run your real estate business.
But now you're talking a business, not rental income.
Oh, correct.
So you have to be very careful with that. If you're looking at writing off other things and you're actually having a business, that's not on your rental income form. That's on a 2125, which is a business return, right? Which actually I'm not discussing at the moment, is a business return. It's very different.
So let me rephrase it a better way then. So let's say you live in a property and you rent out half of it. You rent out your basement suite downstairs. Now that property has rental income and needs a T776 to be submitted. Yeah. So in that scenario, how do you approach and how does it get set up so you can write off some of the corresponding costs? So I know you said.
Well, you're only allowed a certain amount. Like if you're, you know, your own utilities, you can't write them off. If you're living above and they're living below, you can only write off the expenses that are incurred to earn the income below. What you do above has nothing to do with below. Right? So if you have an office to manage that and you're trying to charge,
let's remove the office out of the example. I'm just talking there's a rental in your basement. So
well, we did discuss that. I remember I said if you have, if you're living above and someone's living below, right, then 50% of all the expenses, right? So if you're sharing utilities, if you're sharing certain property taxes, all those things, right, then 50%, and you've said that it's about 50% of the house, right, that you're renting out, then 50% of all those expenses, the total amount of those expenses can be expensed, right? So if your property tax bill is $3,000, you will be able to, you know, allocate $1,500 to that specific unit. But if you're it's the same thing of trying to charge yourself for labor, right? It's charging back things that it's a basic in and out because you're a proprietor, right? You can't charge the rental unit for your own labor.
Okay. Good enough.
You don't allow that.
I like that.
Okay. Yeah. So, so that's sort of that. If one of the things that you and I talked about earlier, Mackenzie, was change in use, and I'm just going to touch on it just so people get a feel for it. We won't have enough time to go probably into all of it, but if you change the use of your home, so let's say you decide in June that you're moving out of your home and you're going to rent it out. Okay, it's going to become a rental property. At that point in time, it's considered you sold it. And you must sell it at fair market value, okay, to yourself, basically, right? So that then the value of that home, you have to get an assessment of the value of the house. So in June, you decide we're moving out, we're going to another house, we're going to rent out this house because we can rent it out. Then you have to get a fair market value assessment of what the value of that house is, okay? All right, we had sort of discussed that a little bit, okay? And you're basically requiring it at that cost to be your rental property, right? Okay, so if you earned it before, anytime that you earned it before, there's no capital gain or loss, right? So you have to be very careful, and this is just something we could probably do another show on, right? But I just want people to be very aware that if you change how your house is in the sense of you move out and start renting it, okay, it's considered that you've sold it, and you have to get a fair market value for it, right? Because then it becomes a rental property. It is no longer your principal residence. Okay, that's something just a food for thought. There's a lot more that goes on into that, but just so people are aware and be careful, right? If you decide and forget to do that, there are a lot of other ramifications for doing that. Yeah. Okay. Yeah. So I think that's quite a bit of stuff I've thrown in there for a lot of people, especially I think the capital expenditures, right? The bottom line on that is look at the value that you're putting either back to your building. Okay, is it adding value to the building? And when we talk about renovations, most renovations are adding value back to the building if they're bigger. If you're doing it to get the house ready to sell, then it's a capital expenditure. If you're doing it, yes, change of use can make a really big difference. It can. So right, Christine.
Yeah. I think she's waiting to with you guys.
She knows. She's yeah. So I just wanted to touch base with that so people sort of knew. But again, going back to capital expenditures, really make those decisions. Look at the chart. Mackenzie's going to give you a link to that chart. It's very important. You don't want to expense something that should have been capital, and then you're having to go back with Revenue Canada, right? So, yeah. Does that make? Does that help out? It's the same question. Yeah.
Yeah. Yeah. Guess good doing that. Yeah, no, it does. It does. Yeah, clicking the way there. He's just sitting there.
Yeah.
But no, that is and I'm just going to highlight an important fact here. I've learned is part of building, we'll call it your professional team, your network, right? It's the things that you don't do well you're more suited to outsource them, obviously if they're within your costs. And you've given us a ton of information, and it's a lot to keep track of. And going back to be a bookkeeper and accountant, bookkeeper you talk to almost on a weekly basis. If you are running your business or you have a bunch of rental properties and there's a lot of transactions that you're keeping track of, this conversation happens frequently. And a really knowledgeable bookkeeper will build the foundation of all the right books in the accounting and all the numbers that get handed over to the accountant to make in a big picture a very quick decision, because the day-to-day stuff's all done all by your bookkeeper. So having someone you can rely on, ask these questions about these gray areas of capital expenditures versus expenses, because I didn't even know there was this gray area, and you can go get rulings on your unique situation. That's why it's so key to have someone that knows what they're doing helping you out, because that could be the difference of easily thousands of dollars on your tax bill. Yeah.
I think a key thing too is to really communicate with your tax preparer and your accountant on when you're getting ready to hand in your taxes, right? Ask them questions, explain to them. If you're just giving them a spreadsheet, if that's what you do, right? Make sure it's detailed so they know, because come tax season, as we all know, everybody gets really, really busy, but you want to make sure that they're aware that some of these things that you think maybe are expense really should be a capital expenditure. So get to know who your tax preparer is, or your accountant, spend the time, with them so that they know and they can prepare it properly, because the accountants will analyze and interpret the data they're given. Right? Or they try to, right? That's what they do and provide your tax returns, and tax preparers will do the same. So yeah. Thank you. Yeah, she's right. Like, don't be cheap. Yeah, but she's right? Like, I know people are always trying to save money and they don't think that bookkeeping or, tax is important, but it is. It becomes extremely important if you get audited, or if you don't have that paper trail for them. So, even if you have one house and you want to do it yourself, that's fine, but make sure you're getting some help, right? And you're making sure you're not missing any of those expenses. It's really important. And if you aren't sure about your taxes, I would advise you to get someone to do it that knows what they're doing, or go to an accountant. It's worth the money in the long run. Like Christine noted, right? It's very important, right? Because the bigger picture, especially if you're trying to grow your portfolio, as it seems most people on here are, you want to start out right. right? And utilize every expense you can and know which ones you can capitalize and which ones you can't. Very, very important.
Yeah, I'll just add in one more thing here is, and I just lost the train of thought. So, I'm sure as you guys watch the show, you'll probably find you're gonna have some more questions. Throw the questions in the comments on the show. I have been politely poking and prodding Diana for a future show, so we'll probably have her back in the future at some point. And we want to make sure you guys are getting value from these conversations. So if there's, ask your questions, and if we see some commonalities, they very well could be a theme for a future show. So your opportunity to provide to shape future shows on Alberta Shoptalk. So
well, I'm here to help. I like to give help, right? And it's not to, as you know, I don't not to solicit at all. It's more to give awareness to people if they're just unsure, and go get help, right? Like go find someone that you're comfortable with and that you want to work with, because it's a working relationship, right? You can't just say, well, I'm going to hire this person. They're looking after your finances. They're doing your tax returns, right?
And they can't do their work if you're not timely in responses on questions they have to complete your books. We talk, Diana, I don't know how many times a month. It's a lot.
And then we socialize too, but it's all kind of intermingled, right? But yeah.
Like you keep me on track, and it's an ongoing conversation to work with a bookkeeper. It's not like you go, here's a box thick full of paper, I haven't talked to you in 12 months or 11 and a half months, here you go. It does not work that way.
No, and those days are kind of over. I find most people want to be, you can't make a sound business decision, right? If you're that far behind.
Or even
right?
6 months or even 3 months. It's really it's an ongoing timely process, because if you get too far behind, and it keeps it messy.
Yeah.
Yep.
Yeah. Well, like Chris had said at one point, like he wants to know, can I, should I buy this one item, right? And I'm like, well, look at your cash flow statement, right? Like look at the cash flow, profit and loss statements, and then make a sound business decision, right? Mm-hmm. Yeah. So if you have your paperwork in order and then you can make better decisions and decide, should I expense that this year or next year? And that's one of the biggest things that people struggle with. So I advise you to get your stuff together so that you can make those good decisions before tax season. As a proprietor, as you all know, December 31st, that's it, right? So you can also get, mock returns done up by your tax preparer that they can sort of feed in some of your information and sort of give you a picture if you don't have all your information in, but they can kind of give you an idea of where you're at. And you should be able to, if you have, your stuff all together for the year, right? For 11 months, you should be able to have an idea, whether you have a profit or a loss, or whether, you have the cash flow to do anything with it.
Yeah, absolutely. I think that was really, really good information. So one question that did come up, I answered it on the fly typing, but we'll just address it now. People are asking where that list is of expenditures. I do have the link. Thanks, Diana, for providing to me. I've got the link going back to the Government of Canada, CRA website.
Yep.
We'll post that after the show here, and I'll probably throw it into our Mighty Networks Alberta Landlord community platform there, and because we'll create a category for that, because I think more and more bookkeeping and managing your books and these type of questions will come up as we get all a little bit more informed.
Yes, good.
I'd like to say that one of the things in getting involved or finding Diana to do my books is she introduced me to using my smartphone. And with the QuickBook package, it's excellent. And Mac, you were all over that, Mr. Techie. And I get a receipt. I go in to buy something at a store. I bring up my phone, I click it, boom, it's uploaded, and Diana's working with it at the end of the month. And if I lose that receipt or it blows out the window, Diana's already worked it out with the powers that be that receipt is still valid, even though I don't have the physical piece of paper. So
yeah. And those can be reprinted for Revenue Canada too, right? So if you lose that receipt and you have a cloud base or it's in your QuickBooks, right, and backed up, then you can actually go in, reprint it, Right. But I always just say, don't throw your receipts out yet.
Right.
They still, you know what, even though, they do recognize cloud bookkeeping, they do recognize, the receipts attached, they do still advise to not throw out your receipts. I know everyone's trying to get rid of all that paper, but just to be safe, I always say, just keep them, put them all in a box per year, and then you're good to go.
So listen, folks, as we start to wind up here, I want to say that I was introduced to Diana for this bookkeeping through Mackenzie and our connection. And I will say that it has been one of the best things for me. And I can't, validate you or endorse you any more than I have throughout the different shows. But Diana, will you tell people how to get a hold of you? Because you're amazing. Simply, you're amazing. So if you would tell people how to get a hold of you, I'm sure they'd like to know.
Well, go ahead, Mackenzie.
So we've so this is gonna be Diana's second time on our show. She's a great kickoff show. I think we did one back in July, August.
I think so.
I'm gonna create a form of some standard questions that need to be asked to kind of help qualify it, and it goes both ways, but to help fit. So if you are looking for a bookkeeper, I will add comments to this to how to get engaged with Diana. There's a little bit of some questions you just got to ask. So we're set up a bit of a pre-screened form. As it is a business relationship, so it's a two-way thing. We want to make sure it's a good fit for both parties.
Yeah, and it has to be a fit. Like I said, I don't come on this to try to get clients. I come on to give information. And if you're doing it on your own, great. Just get some help and some knowledge so you understand. If you're looking for someone, you must have a good fit with them, because they are having access to your personal and private information, and you need a good tax preparer and a good accountant to help you out with everything. It's very, very important. Yeah.
Cool. Oh, thanks, Christine, and thanks. Who was the other person? Oh, it's Sandra. Thanks, Sandra. Right on. Appreciate it. So if you guys haven't already done so, we're going to wrap it up right now. We have launched a new community platform on Mighty Networks called Alberta Landlord Community.ca. Think of it as your private Facebook for all things landlording. It's got multiple topics that organize information. It's got a calendar. It's got really a lot of features. So if you haven't done that, head over right now, Alberta Landlord Community.ca, get signed up. All this great information is getting tossed over there. So on that
note, don't forget to tell them about your YouTube channel. You got to tell them. Got to get everybody on that too.
Well, ours. It's not just. It's just not. So again, if you want to stay up to date in these shows, the easiest way is on YouTube, because we can schedule things farther in advance. Again, on that community platform, we have a calendar there as well for all of our different events. That's really the place to stay up to date. I've been getting a lot of requests for podcasts, so that's something under consideration for 2021. So stay tuned for that. I know a lot of you guys listen to this show when you're doing something and you got it on in the background. So that is something we're looking at for the future, to kind of give you guys more tools and opportunities to listen to us. So on that note,
you didn't say, where do they go on YouTube?
Oh my God. Okay, Chris, thank you. You do.
You get so sidetracked. I can't, because you're the tech. You do it. I fix your toilet. You fix the computer.
On YouTube, we're at findgreattenants.com. My diligent partner in crime keeps me straight and narrow is Chris Noble. We are the only show in Alberta dedicated to Alberta landlords, the Alberta Landlord Shoptalk show. Thank you for tuning in another Wednesday. We've got one more coming up next week. We've got Greenleaf coming on back on. I haven't posted it yet. It's coming back out. And on Tuesday, it's not announced yet, but you know now, we have a bonus show with another property management company, our premier sponsor coming out, or our preferred sponsor, sorry, Andrea Workinson out of Central Alberta. Any of you guys in the real estate investing game for some time in Alberta will probably know her name very well. So exciting. Way to go, Chris. Okay. Thanks, Donald.
I got him. I'll cover him.
All right. Awesome.
You keep pushing buttons.
Good night. We'll see you guys very soon. Stay active in the group, ask questions, and help each other out. Thanks for being part of the conversation. See you next time.
Thanks, everybody. Thank you, Diana.
You're welcome. Thank you for having me.